To summarize, the second source of the market failure externality is we have the positive externality and the negative externality. So when the goods have the positive externality, the society's benefit will larger than the market benefit. And then the market tend to underproduce. The government need to subsidize to shift the demand right. And if the consumption generates a negative externality, which means the society's cost is larger than the market cost, and the market tend to overproduce. So the government need to restrict the production to shift the supply left. So for the negative externality, you can think about the pollution. So when the factory they start to organize the production, they discharge a different kind of pollution to the environment. And so what the government, so in that case, they impose the society cost, which they didn't realize. So what the government have done is they will either impose a tax or fine them or the set up the standard to restrict the production. So the third source we will talk about is called the market power. So the definition for market power is the ability of the firm to manipulate the price of the good in the market. So thus the firm can restrict the supply in order to maximize profits rather than produce society's desired mix of the output. So first, here is an example. Think about the crude oil. So the crude oil is controlled by the OPEC countries. So actually, they restrict the supply so that the crude oil can always be set up a very high price. Unfortunately, the OPEC is a international organization, so no government can play a role to control their behavior. But however, think about the Microsoft. It used to be a monopoly in the U.S. market, and years ago, the government sued Microsoft and asked them to release their secret code. So now they have a lot of competitive firms on the market. So Microsoft no longer have the very strong market power. So we will talk more about the market power on chapter 8, 9, 10. Especially we will talk about the monopoly. So in this case, if we have this source of the market failure, the government's role will be restrict the market power, such as the Microsoft case. The government asked the Microsoft to recover certain secret code, and also the government can promote more competition, such as give the subsidy to certain small company. And the last source of the market failure is called the inequality. So we know the income distribution before, and for the government, they want to reduce the inequality in the incomes and provide a minimum amount of merit goods. So what is a merit good? So that is a good society believes everyone is entitled to some minimum quantity of it. And the government redistribute income. They can use the mainly use is a tax system and the transfer payment. So they have the progressive income tax system. So they collect the tax from income earner. So the more you earn, the higher tax rate you need to pay. And also they can use a transfer payment. So they provide a payment to individuals for which no current goods and service are exchanged, like those the retirement plan and the health care. So now let's focus on talk about the taxation. This is a very important concept of this chapter. So the tax pay for the government spending. There is a change in the output mix as more government spending absorbs the factors of the production that could be used to produce consumers' goods. So for this class, we don't really need to get more detail about the where the tax come from and where the tax go to, because in the macroeconomics you will know more detail about the taxation. In this class, we focus on talk about different type of the tax. So the primary function of the tax is to transfer command over resources from the private sector to the public sector. So here is the federal tax. So 48% of the federal tax is from individual income tax, and 34% is Social Security tax, and corporation income tax take up 11%. First, let's talk about income tax. So income tax is the largest single source of the government revenue. It is a progressive tax system. So what is a progressive tax system mean? That means as the income rises, the tax rate also rises. Compared to those with the lower incomes, those with higher incomes pay more taxes, pay a greater fraction of their income in taxes. So which means if the individual's annual income is $1,000, he will pay probably 2% of his income. But compared with another guy, he has an annual income is $10 billion. So his income, his tax rate will increase to 20% of the income. So which means as your income increase, your tax rate will increase. The second type of the tax is called Social Security tax. It is a regressive tax system. So it means as income rises, the tax rate falls. So compared to those with the lower incomes, those with higher incomes pay more taxes, but pay a smaller fraction of their income in taxes. So let's use the 1,000. Let's think about the person only have $1,000 a year, so he probably paid 20% of the income to the Social Security tax, and for the guy in $1 billion a year, they probably only pay 2% of their income. So that means as the income increase, the tax rate will fall. How about other tax? The corporation tax. So the corporate tax is usually passed on to the consumer in higher prices. So it is also a progressive tax system to the corporation. So which means as the revenue increase, they will pay more tax. So exercise tax. So that is imposed on specific good or service. Some are imposed to discourage production and consumption of those goods. Think about the tax on the alcohol, the tax on the cigarette. It's usually very high. So because they want to discourage the production and consumption. So how about the property tax? If you have your own house, the real estate, you need to pay the property tax. If you invest your money on the stock market, you also need to pay certain property tax. So the property tax is a major source of local tax. It is a regressive tax. So that because poorer people devote a larger portion of their income to the housing costs. Again, this is a regressive tax because the more income you have, the less relative tax you need to pay. So the next video we will talk about the government failure. But so far we talk about the four sources of the market failure, and we talk about how the government can help to reach the social optimal. In the next video, we want to talk about if the government try to intervene, they probably will cause more trouble.